What's up guys and welcome back to Wall Street Millennial. On this channel, we cover all topics related to stocks and investing. In this video, we're going over some of the craziest gains and losses on the Wallstreetbets forum over the past week, so you can learn from other traders' experiences. First off, we have user Billa Finley, who posted a screenshot of his portfolio decreasing in value by 96% in just the past day, costing him a $4,480 loss. This gut-wrenching one-day loss comes from a failed earnings YOLO on Wells Fargo. The OP poured his entire portfolio value into Wells Fargo calls right before they announced earnings results on January 15th. Unfortunately, earnings failed to meet analyst expectations and the stock immediately tanked 8%. Wells Fargo's stock has been under pressure over the past 5 years, significantly underperforming its peers and the broader market. This was largely driven by their fake account scandal, where they fraudulently opened fake accounts for their customers, charging excessive fees and unfairly tanking their credit scores. Once these scandals were exposed, the bank was forced to pay billions of dollars in legal settlements and suffered severe reputational harm as consumers were now weary to patronize an institution with such a checkered history. More recently, the pandemic has forced Wells Fargo to take significant loan loss provisions as they anticipate higher delinquencies on their loans in the depressed economic environment. In the fourth quarter results announced on the 15th, Wells missed earning estimates on both the top and bottom line as their operations are still significantly impacted by the pandemic and associated recession. Furthermore, they are losing share in the mortgage lending business, with new mortgage originations down 12%. This bad news caused the stock to plummet and the OP's calls to expire worthless. Fellow Wallstreetbets users advise against betting on value stocks like Wells Fargo for earnings plays. It is instead better to go for high-growth meme stocks where earnings don't really matter. Next up, we have user aband9. This Wallstreetbets user made more than $20,000 on calls on Tata Motors, expiring Friday, January 22nd. Tata Motors is an Indian automotive manufacturing company in Mumbai, India, and produces cars, trucks, vans, construction equipment, and military vehicles. They were the first major Indian car manufacturer, and they were made famous by their Tata Nano, the world's cheapest car. They went public in the US in 2004 and actually bought Jaguar Land Rover from Ford in 2008, dipping into the higher-end vehicle markets. Since their IPO, Tata stock has not done particularly well for investors. Despite a brief peak at $50 a share, up fivefold from the IPO, they then tanked more than 90% to less than $5 a share during the pandemic. However, it has benefited from the wide rally since the March lows, along with other stocks. In the past month alone, it has gained 58%. Compare that with the SPY, which has only gained 2.5%, or even Tesla, which has only gained a measly 29.44% in the same time. User abound9 was foresightful enough to go long Tata Motors on its pandemic weakness. They bought 100 contracts at $21 each for a total of $2,100 of original cost basis. After a 987% increase in options price, this trade is almost a 10-bagger. Tata Motors stock is still at about $17.50, far from the strike price of $25. However, there are still 4 days left until expiry, so it's entirely possible that these calls could expire in the money. If it were up to me, I'd take the 10-bagger returns and run. Next off, we have user MLG Ethereum, who posted a screenshot of his account tanking 89% or $3,000 in pretty much a straight line over the past few weeks. As with most losses on Wallstreetbets, the OP made the fatal mistake of buying high and selling low. At the peak, he bought Zoom 480 strike calls expiring on January 22, 2021. Unfortunately, right after he initiated the positions, Zoom stock started tanking following news that the vaccines have been improved. Zoom has been a huge beneficiary of the pandemic, as companies and schools have been forced to use their platform to communicate as they work from home. This has led to a massive 600% gain since the beginning of 2020. Unfortunately for the OP, Zoom peaked in October and has since given back some of its gains, falling more than 30% to its current price of $384. This resulted in a sharp decrease in value for his calls, and he ended up selling for a loss, having lost almost everything. This just goes to show it's not just enough to be right about an investment trend. You also have to be early, or else you end up buying in at the top. Better luck on your future trades. Next off, we have an epic fail from a Seeking Alpha contributor brought to the attention of Wallstreetbets by user Ill Nonchalant. The person in question is Andrew Shapiro, who recently suffered huge losses by selling naked calls on GameStop right before its massive short squeeze on January 13th. He sold calls with $20 strike prices, which were at the money when he sold then. GameStop shares are now worth $35, almost double the strike price. While selling covered calls is a low-risk strategy, as the appreciation of the shares that you own will offset any losses you incur when the calls are executed, Andrew Shapiro sold naked calls, so the potential for loss is unlimited. While we don't know exactly how big his losses were, as he did not disclose how many contracts he sold, The position was likely quite significant as he seemed to have much conviction in the trade. He said the recent price surge in the stock was unjustified and he was taking advantage of the huge volatility premium by selling call options with close expiry dates. He thought there were no near-term catalysts to push the stock higher over the next few days. While this may have been true, he failed to foresee the short squeeze, which sent shares up 100% the very next day. This mistake likely incurred millions of dollars of losses for him and his investors. This monumental failure is especially embarrassing as Andrew is not just a Wall Street Bets degenerate. He instead proclaims to be an investment professional with 28 years of experience managing hedge funds. While many Wall Street Bets users have made millions of dollars riding the epic ride of GameStop stock over the past week, this so-called expert, Andrew Shapiro, suffered a possibly career-ending loss. Just another win for Wall Street Bets and another loss for Wall Street professionals. Next up, we have Robinhood user Yuchi Ha of the Leaf 69. This Wall Street Bets user made a 5-bagger off Blackberry calls. He's currently holding 7 contracts of 15 strike calls expiring on January 21st, 2022. Blackberry has made a monster 76% run over the past couple of days, fueled by Wall Street Bets YOLOers, and was up 12% on Tuesday morning off the back of news that had settled with Facebook over patent litigation. Blackberry had sued Facebook for infringing on Blackberry's intellectual property with the Facebook Messenger app, and over the weekend they settled. Although the settlement details were not released, it is seen as a major win for Blackberry, which has been having trouble monetizing its patents. Needless to say, Blackberry has overtaken the Wall Street Bets forum as many of its members have posted evidence of YOLOing into the stock. This Wall Street Bets user is just the latest to offer evidence of massive gains on the stock. After making a 5-bagger on this trade, the OP asked the discussion section when to sell. User TheGeeBear97 points out that there's still an entire year left until expiry, so he shouldn't sell anytime soon. Literally every single commenter says to practice the tried and true technique of diamond hands. User Illiterate thought that even asking about when to sell was a typo, while AMR Gunner 1 suggests not to sell until a stock doubles another 3 times. The Crester just tells the OP not to do it. It's clear that Wall Street Bets has no tolerance for posts that glorify paper hands. Speaking of zero tolerance for rainbow bears, let's round it out with a gain from user 24769-420. This user took the astonishing move of, quote, inversing Wall Street Bets. After seeing GameStop's massive rally last week, he bought 4 contracts of 44 strike puts, expiring in 1 month. Although GameStop has mooned, minting trillions of new Wall Street Bets millionaires, there was a brief time when the bears could have made money, and this is what this daredevil did. However, even he knew not to spend too much time in the danger zone, and sold out of the position on the same day, right before the bulls took control again. This type of arrogance from a GameStop bear is sure to be expected, but when it happens it is not taken lightly. User Desperate Salad exposes him for only making a 700 to 4600 reward to risk ratio, risking $4,600 on option premiums to make only a 15% gain. User HypeTrain87 points out that the Trump bucks paid out more than this trade. Based on the likes to dislike ratio of the OP's responses to these comments, I think we can all learn that taking a bearish bet on the Wall Street Bets meme stocks is akin to ostracizing yourself from the community forever. Rest in peace, 24769-420. Alright guys, that wraps it up for this video. If you like the content, don't forget to like and hit the subscribe button. Also make sure to check us out on TikTok. In the meantime, thank you so much for watching. Wall Street Millennial, signing out.